Hello, everyone, and welcome to another episode of Stocks. I didn't post the video yesterday, so I need to catch you guys up on what I did. There's a lot of stuff going on, so yeah, let's just get into it. First of all, Centrus, I got into 2 days ago at around 2:45 or so, and then yesterday it started making a run. So yesterday I was like, okay, well, let's not be too greedy. So I took a 10% profit and ran, but man, it just keeps going. So it is a uranium stock, and the reason why I didn't wait longer is because I'm uncomfortable with the PE ratio. So here at Stocks, we're very timid. And when we invest in things that have over 30 MP ratio, we often think, well, what is the downside? What if it collapses? So, yeah, maybe I did the wrong thing because today it is still just skyrocketing. So I did leave a lot of money on the table, but I don't regret it because we have principles here. Um, this is a good stock to keep note of, though. It's just for short bursts. It just seems like it's got so much momentum because if you look at it, like in the past year, this thing's gone berserk. I mean, this thing has gone, uh, yeah, this thing has gone over how many percent in 1 year? Went from 50 to now 300. So there's a lot of interest in it, obviously, and for a stock that has gained so much in 12 months, relatively speaking, that P ratio is actually kind of okay. Anyway, so we got out of that. Next thing we did was we got out of Arista. So with Arista, we saw a dip, and then I thought, well, um, we could we could make a quick profit, but it actually took a few days longer than I wanted, and I actually doubled down, which um, I'm probably not going to do again on stocks like this because again, doubling down on something with a P ratio of 58 is very dangerous. So that's something I am now correcting on myself. Anyway, Arista, I ended up exiting, maybe making a profit of like 1 or 2%, making like $100 or so, but just got the hell out. Okay, now on to today's activities. NatWest was down. NatWest apparently is a big banking company, owns a portfolio of brands in the UK. Um, and it's down because of some like interest rate concerns in the UK, but nothing major. So I think this is a overreaction, so I picked some up. I exited Uber, so Uber was also one that I picked up maybe 2, 3 days ago. Um, it was never meant to be long term because Uber is already at its 52-week high. So when I picked up on dip, I just wanted to make my quick pop and get the hell out, which was what I did. Um, Granted, I do love the stock. I mean, for a company with its momentum and its business model, um, that is a very reasonable PE ratio. But for now, I've said a temporary goodbye to Uber with a tidy little profit. Today, I went back into Torm. This is one of my perennial favorites because this thing just trades in a zone forever and ever and ever. So, um, the way I see it. I mean, they got tankers, right? So tankers shipping oil is their business. Tankers don't really go anywhere. Like you'll always need tankers. So um, especially with its very low PE ratio, um, it's really just there for you to buy on the dip and then sell when it rises a little bit. The band's not going to be very high, but my expectation is only 3%. So today it lost 3%. I just needed to get back to where it was yesterday, and that'll help me reach my objective. Progeny is a bit riskier than Torm, but still, it does trade in the zone as well. So if you look at 6 month or 1 year, it trades in this very nice zone. And today it went to towards the bottom of the spectrum, so that picks some up. Then finally, this is a bit riskier, but Micron has had such great momentum because of the AI revolution and the need for not just fast processors. So obviously NVIDIA is in the spotlight, but Micron kind of in the sitting in the co-pilot chair. No pun intended. They sell memory chips, right? So for any server, you don't just need CPU, GPU, you also need memory. So they've also had a nice run. There's a dip today. Mostly I could see is due to profit taking. So I got in pretty aggressively. Mainly because like I'm not too uncomfortable with a PE ratio of less than 30. So you know, uh, its valuation is pretty reasonable. So that's why I'm in it. And hopefully it's Friday now, so hopefully Monday, it comes back to its normal levels, and then I could exit with a quick 3% pop. So those are the activities for today. Hope you guys are making a lot of money, and I will talk to you next week.